to the Real Estate Success Podcast, where we unlock the secrets to thriving in the competitive world of real estate. Join us as we interview industry-leading realtors who share their journeys, strategies, and lessons learned on the path to success.
Welcome to What Works Wednesday. My name is Cody Hawkins, and I'm one of the certified financial planners at PeaceLink Financial Planning. We help real estate professionals and self-employed individuals manage their money with confidence and clarity so they get the most they want out of their life. Today, we're talking about the question we've been getting recently, should I do a Roth conversion? Specifically, a new rule came out in the TSP that has brought this up. And so in January of 2026, you're eligible to do these internal Roth conversions in a TSP. What a TSP is, that's the thrift savings plan that's available to federal employees as well as military personnel. So I just want to start off, what is a Roth conversion? So I'll back up a little here and say, there are two types of retirement accounts. There's traditional or pre-tax, and there's Roth or after-tax. Those, when you may be at an employer, they usually will give you an option to contribute to that. Also, you may have heard Roth IRA or traditional IRA. Those are two different types of accounts. The real question is, when do you want your tax break? And we have some other episodes to talk a little bit more about that, but I want to talk specifically about what a Roth conversion is. So a Roth conversion simply is moving money from a pre-tax account into a Roth account, like a traditional TSP into a Roth account or traditional IRA into a Roth IRA. And there is some trade-offs with that. So how it mechanically works is you can do this, but you're going to pay income taxes today. So if you were to do a Roth conversion in 2026, let's say it's $10,000, you convert pre-tax money to Roth, the IRS sees that as you received $10,000 of income because you got a pre-tax break when you put the money into the account, and now you're converting it to after tax where it never gets taxed again. On this year's tax return, they're going to say you got $10,000 of income. Now, in return for doing that, paying that taxes, it's going to be tax-free. You don't have to take required minimum distributions later in life. And it can create some flexibility. So it really is a decision about how do you want to control your money. And you may have not had a choice on contributing pre-tax or Roth earlier in life, and now you have an opportunity. But we want to make sure it makes sense. It's really shiny. Everyone wants to not pay the tax man. And I get it. We want to pay Uncle Sam exactly what he's owed, no more and no less. But there's a reason why both accounts exist. So I'll say, Roth conversions are not about avoiding taxes altogether. They're really about choosing when to pay the taxes. And we're all about control. Why would someone do a Roth conversion? They want to lock in at lower tax rates. They want to create the tax-free income later, or they maybe want to reduce those minimum distributions. And now we see people asking these questions, in retirees or, maybe some younger individuals. Should I do it now? And the question is, I don't know for you, right? It's going to require a lot of planning. Like, are you going to be in a lower tax bracket later? Are you in the highest tax bracket now? It's about intentionally timing these Roth conversions so that we not only reduce the taxes you pay this year, but we reduce the taxes you pay in your lifetime. We hear all the time CPAs do not like Roth conversions because it added taxes in this year and you don't really know what the future is going to hold. But with a good financial plan, you can see, hey, if I pay a little more taxes here, later in life, I may pay a lower tax overall. So the single most important factor is what's your current income and what's your tax bracket. Roth conversions tend to work best during windows like early in your career. You're between jobs or career transition where you have lower income. Maybe you're taking a sabbatical. Maybe you're taking unpaid leave. Maybe you're a variable income professional. Like we work with a ton of real estate professionals. If your income's up in one year or down in another, it could be a great opportunity to convert in that early year. We see it also a ton for retirees. right before Social Security or their pension income begins.
Quick pause. Hey, realtors, if you're earning great commissions, but worried you might be missing something financially, we built a tool just for you. It's our free 2-minute real estate financial health assessment. Don't wait until tax season exposes your financial gaps. In just a couple minutes, you'll see exactly what's strong in your business, where money might be slipping through the cracks, and what to fix before your next closing. Most agents have blind spots they never even think to check. You don't have to be one of them. Just head to realestatesuccesspod.com and get your personalized score and insights in 2 minutes or less. All right, back to the episode.
Maybe it makes sense to take some taxes now at your lowest tax rate and convert it to a Roth. So during, these periods, we may be able to convert pre-tax dollars at relatively low rates and now compound it for the rest of their lives at never getting taxed again. What we see all the time is people get really, really excited about the idea of, not paying taxes. And so they make a couple $100,000 a year. They've got these older accounts. They're like, hey, let's go ahead and convert it. But there's a reason why these accounts exist. And so I think it makes sense to take a step back and say, okay, we understand what a Roth conversion is. When does it make sense for me? And in some of those scenarios I just said, I think that it does make sense. So when I think about what's changing inside the TSP is where a lot of people's retirement savings are. We live here in Hampton Roads. There's a ton of military personnel. So they allow you to do a Roth conversion internally. Beforehand, you used to have to send it to some other place and then do it, or wait until you separated from service. And now you're able to do it while you're employed and while it's still in the TSP. But the difference is, even though this feature, and they've been sending lots of emails and they have cautioned really well, it does not eliminate the tax consequences for this. So any converted amount, even if you're still working, is going to be still taxable in that year of conversion. And the other thing is taxes are not automatically withheld when you do a Roth conversion. And so that means you need to plan for how your tax bill is actually going to be paid. So what I would say is I would just caution, like, hey, again, take a step back. What is the long-term impact of this? We strongly discourage doing any Roth conversions without running some numbers. And it's true, yeah, tax-free sounds awesome. But if you're, let's say, at a 25% tax rate, effective tax rate, blended together, and then in retirement, you're closer to a 12, then maybe it doesn't make sense to convert. But your income's only going to climb and get higher and higher, or maybe you took a year off and you've got some cash on the side, then maybe it makes sense. But that's another big factor is, I just talked about the taxes are not going to be withheld. You're going to need to have the cash available or the strategy available to make sure you can pay the tax bill when it comes. So we see situations all the time where someone contributed to a traditional, TSP or IRA earlier in their career. Tax rate was super low, but that was the only thing that was offered. And then years later, they convert it to Roth during some of their highest income years, and they end up paying way more in taxes than they probably needed to. So once you do a Roth conversion, there's no going back. The taxes are paid today or paid forever. There's no turning it back, and it can create some irreversible mistakes. Now, I will say there's always some pros, right? Like, hey, you're going to have tax-free income, but if you crunch the numbers, maybe it makes sense to not convert or wait till an opportune time to convert. So when I think about here in Hampton Roads, again, we work with a ton of, military personnel, career switchers, just run the numbers. See what makes sense, not just, it may make sense. We've talked to plenty of people where it makes sense to pay a huge tax bill to convert this in turn for having a tax-free retirement or mostly tax-free retirement. And that could be really, really beneficial as that is growing, compounded and not ever having to get taxed again. For a pre-tax account, you're going to pay taxes when you exit. So this new tool in the TSP can be really helpful, but I would just caution against doing something on a whim, and they do a great job of making sure you understand what that is. But a Roth conversion is really about how do we pay the least amount over your lifetime, and a lot of times if you rush into it, you might pay more than you need to. So if you found this helpful, share it with someone who's in the military or has a TSP account. It might help explain a little bit better about that. But also, our team's happy to take a call and answer anything. So thanks for listening to this What Works Wednesday. We'll see you next week.
Thanks for tuning in to the Real Estate Success Podcast. Before you go, a quick reminder. This podcast is for educational purposes only and is not intended as tax, legal, or investment advice. The opinions shared by me or any of my guests are just that, their opinions. So if you're thinking about applying anything from today's episode to your life or business, I encourage you to consult a qualified professional who understands your unique situation and goals. If you want to take the next steps, check out the links in the show notes or go to realestatesuccesspod.com to complete our 2-minute financial health assessment. Or you can book a free call with us at PeaceLink Financial Planning, or just get in touch. We would love to hear from you. Now, go forth, forge your path, and prosper.